Welcome to TopActionInvestments.com. My name is Reed Follier, and I just want to take a few minutes here to share a few ideas that I think you'll find very interesting and profitable in your own trading. Here is a seasonal charting software program that I have the filters that are set in here. You can read that, but basically what it's saying is taking the next trading day from the current date, December 17, 2012, going out 30 days from that point, looking back historically 5 to 15 years, looking for a 3% to unlimited climb. And we're looking for wins 100% of the time, and seeing what this research will give us. Inside of here, this is all of my watch list, and we can take this weekly options list, and that's basically what it is. It's the weekly, all the ticker symbols with the weekly options associated with it. And what do we have? We have several things here. You'll recognize some of these stocks. So starting at this date, going out over the next 30 days, 100% of the time, over the 30 days there, over the last 5 years, it has been a profitable trade. Looking at the JOY here, I see with 11 years out, or previous history, it's been profitable 100% of the time with an average gain of 10%. We'll take a quick look at that just to familiarize ourselves and use this as an example. This is not a buy, sell, hold recommendation. This is just an example to show you the power of this program. So here is the days, the years, starting with today's date, going out 30 days, and the profit potential that this particular stock had during that time. So hopefully I said that so you can understand it. So taking December 15th in this case, adding 30 days, but then going back through those years. When has this stock traded profitably, period? So we have a 6.97% rate of return, 7, 12, 4.8, 6, 2, 23. You get the idea. Here's my work here on the historical data that's coming in, and for you spread traders, you can look at this. This is 30 days from this date to this date. This is the price of the stock on this particular date. This is the price of the stock closing on this particular date. So what we are looking at here is a 30-day span in the increase, and then going through and taking historical data and building an entry time, a period to where this stock would be have the highest probability for a profit, period. Here are the profits that you would have had, just labeled in this format here. And as you know, this would be a phenomenal program to use for spread option traders. Let's take a look here on the graph and see what we have. Another thing that we have capability of doing is taking this trend line here, 2012, and running it with a historical trend line of the 5-year trend, and here's the 11-year trend. And so what we're looking for is to make sure that this 2012 line is not erratic out here and doing something not in sync with a historical trend. Because we see here January 20th, we're gonna have a fall off, and look at this data. That's amazing, because we even have the hump there, and so basically we're looking to enter if all goes well and this particular stock continues to trade. We'll probably hold off on it for now, but go ahead and enter in on about January 31st, the last day of trading on January. You could sneak in there potentially for a quick profit, because historically it's proven, but I definitely would be out by 19 January, because inevitably, you see this, it always typically trend, average speaking, it trends down during that time. Okay, let's take some incredible information right there. Just some other stocks real quick, just so you know that there's multitude out there. Look at this right here for John Deere, decent open interest, nothing fancy. Always want to stay away from earnings, any kind of news, lawsuits, any CEO change, huge purchases that could possibly go wrong. Anything out of the ordinary on the fundamentals that would prevent us, we will research and look through a line item by line item to make sure that there's no lawsuits and anything like that could be arbitrary and prevent this particular historical event from happening. And that's why we like to stay away from earnings and those types of things. We want to just sneak in there for 30 days in between earnings and take our little 4, 10, 7, 9 or so profit during that 30-day period and get out and move on to the next trade. We're not there for the long haul. We're not married to this stock. We just want to jump in, borrow it for a month, and jump out. Because as you know, if you can stay around the 5% or greater rate of return on average, at the end of the year you'll have a nice healthy gain, and that's ultimately what we're shooting for. That is the primary goal. Just typing in some other ones that I know that trend well, just for demonstration. That one, Verizon. Here we go. Didn't like it in that box. I think I had some other settings in there, but here we go. We're looking at Verizon right now. Wouldn't it be nice to know that average speaking, it typically drops off around November 20th, and it starts a nice climb up, and it has done so over the last 29 years on average. It has done so in the last 5 years on average with this green line. You can see the green at the 5-year, the red is the 29-year average. So, and what do you know? Anybody, a blind man, could see this one coming. So there we go, upward trend on the Verizon, and looking to be out obviously around the 1st of January. So because historically speaking, if you want to trade a bullish trade during this period, you go ahead. I'm not. I'll sit on the bench and watch. We have numerous other trades, like I said, but we'll just take one real quick and I'll wrap this video up. But this is the one we talked about a little earlier, Joy, J-O-Y, historically trending, and we're looking for a squeeze, which we have it right here. And once you have the first green, the first blue hash mark over the green dot on the TTM squeeze indicator, this is proprietary software, John Carter. So we're looking for the one blue hash mark over the green dot, and up we go for the next ride, and that's our official entry signal. And basically what this is this is the Bollinger Bands here coming inside of the Keltner channel. The Keltner channels have been replaced by these red dots just to make it easier to see when we're inside of the Keltner channels with the average, so that we can create that squeeze. Because typically anytime you take a stock and you put a squeeze to it, it'll shoot out in one direction or another. I'll show you. I think we have just a few more minutes, and we'll look at some stocks here that have traded well. This particular watch list are the weekly options watch list. Just in case you're wondering where I gather my watch list from. But here you can see, I mean, how do you trade this? You're better than me. You better be on a 5-minute chart if you're trying to make any money out of this mess here. But what we can identify is these tight bands, Bollinger Bands, coming together here inside of the Keltner, looking for the first blue dot past, or the first blue hash mark on the green dot in the direction of movement. Once you have that directional movement, then you can ride it looking for an exit. So as soon as you enter, we actually entered this one on the September 10th, and then followed it. The closing price here is 437. Coming up through here, the trade went horizontal on us for a little while. We thought we were going to have an exit signal, which is the one closed past the middle line there, the Bollinger Bands, and thought we were going to have to close it out, but we were already profitable, but we didn't. We made more money. As it popped up, it came back down, got a little worried, started looking for an exit. Boom, made some more money, which that's better, and came back down, and ultimately started really showing strong signs of closing below. So we actually got out on the 22nd. So approximately 12 days there, and closed out 466 on that particular on September 22nd. For a $30 move. Now, for the option traders out there, you know what $30 move can mean. And for purchasing the stock outright, it would be dependent on, you know, how many the share, the price, and $30 on the 400. So I'll let you do the math. Other than that, look forward to working with you. TopActionInvestments.com, where we are going to take all of these seasonal trends and trades and post them line item by line item on where, and I do want to, I'm sorry, let me go back and do the broad market real quick, just so you'll have an idea. Never trade against this broad market here. We're looking to enter bullish trades in and around this date here, March 7th, and we're not going to be in a bullish trade anywhere after January 5th for obvious reasons, just by looking at this chart. Historically, it trends down after January, and we'll anticipate it because it's moving with the averages now on the 2012 line, and as this 5-year average is coming down, it's making a nice little low area there. It did that in 2012. Historically, it trends up. 2012, it trends up. So we have no real reason to anticipate anything different other than what this 2012 trend line is going to show us in March, as we start to study our trades during this period here from the end of January and February, and as this market continues to go up, as it has March, April, May. I like the old saying, March, April, May, go away. Invest in March, April, May, and go away. So the exit on all bullish trades will definitely come in and around the last part of April there. Okay, well, I hope this has been educational for you. I look forward to putting a lot of more videos together with a lot of real information that you can truly use towards evaluating whether your trade should be on the table or close it out or hold it out. But hopefully some of these videos will work. Look forward to seeing you subscribe to the Top Action Investments website, and working with you in the future. Have a happy trading and good luck.